Alright guys, I'm going to make a video here. I'm not sure how long it'll take. I just wanted to go over the week and kind of review what happened and where the market might be going. We have the weekly chart up. First thing I want to point out, this week closed above all prior highs. So that's a very bullish sign. It closed above 5,800. It closed near its high, small tail on top. And it closed above these prior highs here and here. So with the 6,000 big round number ahead of us, that's going to be a great target to be looking at. Market easily could just get pulled up to that level, like a magnet. It'll just get pulled up to it. Especially with this level we have in here, right? This acted as a resistance, broke out above, then it acted as support here, and then support again here. So we have sort of a double bottom at the moving average. We've had 5 bull bars in a row, so we can expect some sort of second leg up after that. We have more. We have this this close, this open here, and we broke out above it and came back and tested it twice with this micro double bottom. So on these 2 bars, it looks like 2 small tails touching it, but this is a weekly chart. So really, this is over 2 weeks. This is 2 larger attempts down to break below this level, and those have failed. And then we've gotten a good-looking bull close above these prior highs. So that's a bullish sign going into next week, going into the rest of the month. 6,000 is definitely a target that should be on our radar. Pull up the daily chart here. And really, I think the daily chart is telling the same story. Today closed above all these prior highs. So the highest price of all time was hit today. This is also the highest close of all time. All right, we can see we're seeing the same sort of double bottom that we're seeing on the weekly chart, and movement up. Several attempts by the bears to go lower, and you could call it a sort of a head and shoulders bottom here. Left shoulder, head, right shoulder. And then getting good signs that there's going to be a breakout above this. Testing this breakout level at the moving average. Several tails below trying to go lower, and they're failing. Good looking bullish signal bar here, and then there were probably buyers above that bar. And if you watched my most recent video, I show the trend trade I took, the swing trade, and that I took on this day. So that'd be a good video to pull up and watch. Now I'm on the 5-minute chart, and I'm going to start on Monday here, and I'm going to talk through some of the better trades. So Monday opened up within the previous day's final leg, and when it opens up in the middle of this range like this, there's an increased chance the day will be a trading range day. And I also made a video on Monday of how to trade, of how I traded this day. So I showed some of the different, I shorted here, got out with a small profit, and took a couple scalp trades in this area. So when you have the trading range, you have the signs of it being these overlapping bars, bad follow through. So you get a big bull bar, but instead of getting consecutive bull bars after, you get bear bars. You get a good looking bear bar, then bad follow through. So that day was traded like a trading range, and you can check out my video from Monday on how I traded that. A couple swing trade ideas. I did say this was a trading range, but what traders will often do is they'll expect that the range will increase. So let's say at this bar here, this day's range was from 57.74 up to 57.88. So it's only a 14-point range compared to the prior day, which was more than twice that or 3 times that. So some traders will bet that the low or the high of the day will come early and that the range will double or triple in size. So they'll buy above good bull bars, then they'll sell below good bear bars and bet on a swing trade. This is a good looking bull bar. Some traders might have bought above that, and what they'll do is at a minimum they'll go for 2 times their risk. So they'll put their stop below the bar, and they'll hope that they can be able to get up here at yesterday's close. So you'll have some swing traders taking that buy. And for the same reasons, you'll have swing traders taking this sell here. So they'll sell below this bar, and right, they're selling below this bar, second entry short at the moving average, first entry, second entry, and perhaps they got out here. Perhaps they held up for the whole day. And look, if they continued to hold, they would have gotten this huge sell-off. Other entries would be a buy above this and a sell below this, and I have that marked. Probably another short would be this, because now we are fully below the moving average and getting a bear bar. And so traders that are taking these buys and these shorts through here, they are betting that they'll get the low or the high of the day soon. So when they're taking these trades, they're going for swing trades. And you can see, okay, if you took this long, you were wrong. You got stopped out here. But if you took this short or this short or this short and actually held for even just half of this or most of it, you would have way offset any of your losses. We were talking about that this is a trading range all through here. So what are the signs that the trading range was starting to weaken? Well, this moving average was starting to be more meaningful. So the market was kind of playing around the moving average here, but you'll see it starts to actually act as kind of a container for price. Held it here, held it here, held it here, here again. And you can see at this point, really, you could really start drawing in channels, right? At this point, how much are we really in a trading range now, and how much are we starting to transition into a bear trend? So you can look at that, and especially after this breakout and these shorts here, you need to be thinking that the trading range is ending, and there's a good chance that we're going to have a bear sell-off where the range doubles. And of course, it more than doubled there, more like tripled. So that's my thoughts on Monday. Tuesday came in thinking of the same ideas of traders will just look at the first few minutes of the day, first couple hours, and they'll look for the early high or the low of the day. Well, here would be a good example of that. So bears try to go lower here. Got a bull bar. Try to go lower here, which is his tail. So effectively, this is creating a double bottom here. It's multiple tests lower that are failing at the 200 moving average. Then you get a bullish signal bar. So traders that are buying above this, they're swing trading. So they're buying, betting that this will be the low of the day. And the high of the day will be something like up here or even higher up over here. And the moving average video, I made the moving average magic. I had an example day that looked a lot like this day. These tests lower here, to me, they're close enough to the moving average that I almost would consider them testing the moving average. So the market was strong enough to gap up here. Now this is the 415 close from the prior day, And this is 9:30. The market was strong enough for it to market to gap up here. And then these test lower, like through here, and then this test lower. To me, these are pullbacks in what is now a bull trend. So I think buying above this bull bar, I believe these are good options to be buying above for a swing trade. So let's look at buying above this bull bar. You know, you always want to be going for 2 times your risk in examples like these. So 2 times your risk up here. You know, what would that be? That'd be about 11, 12 points from that one trade. And, you know, in that video, the moving average magic video, I talk about, you know, can you be patient enough and disciplined enough to wait for these types of trades to set up? And, you know, this is really really all you need to be doing. You don't need to be complicated any. You know, sometimes people ask me about psychology or emotion. And to me, a lot of what's happening is people will get bored and they try to create trades. You know, they'll just be on some random bar and they come up with some idea and they'll try to implement it. And, you know, really that's a losing strategy. The winning strategy is waiting until you see something you understand and then taking that trade. And if you really understand it, then you trade larger. So you don't need many trades. You just need to wait for that trade to come to you. It's almost like you're by a river and you're trying to pluck something out of the river with your hand. You know, instead of running all up and down the river and you know, trying to jump in and swim to the other side and doing these things, if you're waiting for something if you're trying to grab something from the river, just wait for it to come right in front of you and you just pluck it out. Don't need to do all these extra things. So when you think about your trading, think about you by the side of the river and you're just plucking that item out of the river. You're not trying to jump in and swim around and do all these things. Another point I want to make, the market, a day has three different sections. There's the open, which is this here. You have the middle of the day, which is this. And then you have the end of the day. Those 3 sections, each section is always either a trend or a trading range. So the open is a trend. The middle of the day is a trading range. And then the end of the day is another trend. So try to just look at based on the time frame of the day that you're in and say, what's the market doing? You know, it's a trend, and I'm going to trade like that until it's shown that it's not a trend and that it's transitioning into something else. And usually part of that transition is just based on the time period of the day. So the open is a trend. At some point that trend's going to weaken, and then what follows a trend? A channel in a trading range follows a trend. So there's a trend, it weakens, turns into a trading range, and that's the middle of the day. And then you have to wait for a breakout to happen, and then you see this breakout failed, and ultimately market trended up. So 3 parts of the day, and each part is either a trend or a trading range. So look at what part you're in, and then expect either a continuation of that or a transition to something else based off of those different time frames. So like if you're going from, you know, if it's a noon, you're in the middle of the day, and usually around 12:30, 1, 2 o'clock, you start to change into something else. Like this would be an example. We have this trading range till about 1 o'clock. There was a failure to go lower and then turn into a trend. You know, and when did the trading range started somewhere around here. That's 11 o'clock, so you're kind of starting to get out of the end. You're starting to get out of the open of the day, and you're starting to get into the middle of the day. So those are the 3 different parts of the day. Looking at Wednesday, um, I was really pleased with the trade I took here, and um, you know, made a video about this on Wednesday. So the big idea I've been talking a lot about is the lower the high of the day comes early. So what traders will do is they will buy above a good bull bar, betting that this bull bar is going to be the low of the day. We have a tail here on the first bar, a tail on the second bar. Right, so that's acting as like a micro double bottom. It's occurring at the moving average. Good looking bullish signal bar. There's a decent chance that this is going to be the low of the day, and then the rest of the day will stay above this low. And you can see what happened after that. Another reason to think that was going to be a good bullish day is, if you remember, I was talking about this, so this would be a good buy above that. Well, this bar is Wednesday. And this tail on the bottom here, that's these two bars here. So part of your preparation for the day, you want to look at what the market's been doing, and that would give you an idea of what to expect. So the market had been trending up. You get a double bottom at the moving average, good looking bullish signal bar. Market's probably going to be buyers above that, and it's a good chance it's going to trend. So when I'm looking at this double bottom, moving average, good looking bullish signal bar, I know traders are looking for the low or high to come early in the day. So what I did was I bought here, put my stop below here, and basically I knew I wasn't going to actually be sitting in front of the computer that day. So I was away from the computer, and I was able to just let this trend ride all the way up. And when I came back, the market was kind of around here, and I just moved my stop there and below this bar, and I got stopped out with a pretty decent profit. So I was quite pleased with that trade. I think a lot of traders would benefit from trying to adopt that style of trading. Look at what's happening on the daily chart. If there's a trend, try to get in on the trend early and swing trade. And if you're worried you're going to be stopping yourself out, if you're worried that you're going to buy here and then over here you're too excited that you have profits, so you just go ahead and close your trade. If that's stuff that's happening, then just walk away. Just go do something else with your day. Come back in an hour. You don't need to be sitting there trying to think of reasons to get out. So just put your trade on and just let those swing trades play out. Thursday, I wasn't doing too much trading Thursday, but the market opened sort of in yesterday's final leg. It kind of opened here within this range. It happened here. So what often happens when it opens within that final range is that this day is going to be a trading range. So, and you can see what happened. There were, this leg down, but got bad follow through. Got this leg up, bad follow through. Sellers above this bar, they're able to sell here and sell more higher and make money. Buyers below this bar, buyers around these lows, they made money. And you buy below and continue to make money. So that whole day was a trading range, and the signs of the trading range come early. The signs are where it opens relative to yesterday, and you have the tails and bottoms and tails on top. The day stays a trading range because there's a fair price. So really this marker opened at the fair price. And all this was here was just a test of where the new fair price might be. And it turned out it was wrong. It's not lower. So then it buys it up. And then it finds it's wrong. It's not higher. And then it sells it down. And that's all that these moves are. It's just the market. The market knows what the fair price is, but then it wants to see if it can figure out where the next fair price is. And that's all these tests are. Every time it tries to go lower, there are more buyers and sellers, and it gets bought up. Coming into Friday, got this good looking strong move up here. I think this is an okay buy, and I think this and this are okay buys as well. Ultimately, you did get stopped out, but you'd also be swing trading. So you would take one of these buys, and you'd be betting that the market might go up 2 times or 5 times your risk, and you'd be getting out up here. So you do get stopped out though. And another buy that I like is this bull bar here, to buy above that, or this bull bar. So why do I like these? The market had been trying to go lower. Then after this pullback, it tried to go lower once and then twice, and it's failing to go lower. Not only that, we're starting to get above the moving average and with a good looking bull bar. So bears that were shorting through here, they're going to at some point determine that they're wrong, and they're going to be buying here and getting out above that. And more so here, because now we're even further up. Now we have this body gap as well through here, where we have tails in this area. And once the bulls broke out of this area here, they pulled back, but the bodies did not overlap. So you can see bulls broke out of this area here, and once they did that, the bodies of these, the bear body did not come back and overlap with this or this. It's just tails. You could also just look at it as resistance here, breaks out, starts to act as support. So I like this buy, and I like this buy. So if you had taken one of these, you got stopped out for fairly minor loss, and then you trade again, and you make it back, more so with either of these buys. So that's the week. I'll say it once again. Today closed above all prior highs, and we have a 5,600 big round number ahead. I think that's reasonable to think. We could get there in October. Maybe we have 12 or 13 more trading days in October. I think it's reasonable that we could get there. I think there's a lot of bullishness that's pent up in this. We might not be far enough above these highs yet to where it could still pull back. Well, if there's a strong bear bar and you're long, well, you can get out below that bear bar and then buy again above another bull bar. So I think the bulls are in control, and I think 6,000 is a reasonable target by the end of October. So that's what I had. That's what this week was, and that's what the next couple weeks are looking like. If you like this video and you like the content on here, like the video, and make sure you subscribe so that you get notified when these videos are coming out. So thank you for watching. See you next time.